Hi guys, Louie here. We're going to talk about gold today, and what you see in front of you are some beautiful eagles, double, full, and half eagles. These are from my stack from a previous video. So that's the real deal, but what's interesting is that the price of gold eagles has been coming down. Again, I want to thank Coin Week for this article. It's called Coin Collecting Strategies. Generic gold coins fall to historic lows. So those of us that like pre-33 gold, I guess, are getting a little bit of a rude awakening here. I'm going to read you the story. It could possibly be the best time ever to buy pre-33 gold. Or not, you decide. Coin Collecting Strategies. This is by Jeff Garrett for the Numismatic Guarantee Corporation, NGC. In recent months, the value of United States generic gold coins has fallen to historic lows in relation to spot and gold prices. Generic gold coins are defined as common date United States gold coins that can be found in quantity. Most commonly seen are double eagles from the late 1870s to 1928. The category also includes other denominations: gold dollars, quarter eagles, half eagles, and full eagles. The lower denominations are more difficult to find in quantity, but common dates of the series trade as generic issue. The term generic generally refers to the most common dates of the type. The reason these United States generic gold coins can be found in quantity has its foundation in early monetary history of the country. Over a century ago, the United States began shipping large quantities of gold coins to Europe and other countries as part of international trade. One only needs to check the mintages of United States gold coins from this era to understand the number of coins that circulated here and abroad. We are talking about millions of coins. In 1933, the United States famously went off the gold standard and made ownership of gold illegal. This included all gold coins with the exception of collectible coins. Luckily, the Secretary of the Treasury, William Woodin, was a coin collector and understood the importance of this exemption. Regardless, vast quantities of United States gold coins were surrendered and melted, including over 450,000 1933 double eagles. It took several years to melt everything, and this is the gold that is now stored at Fort Knox. Yeah, right. Many rare coins were turned in as well and were rescued at banks around the countries. There is a fascinating article about this subject in the latest edition of the Numismatists. Vast quantities of United States generic gold coins that had been sent overseas did not meet the same fate. Banks and other institutions around the world kept these coins secured as a store of wealth. Keep in mind that citizens of many European countries view gold favorably for its hard asset appeal. Some have memories of sharply depreciating currencies, or worse, the overthrow or invasion of the country itself. Unlike in the United States, many banks in Europe sell vintage gold coins from around the world, including the United States double eagles. Starting in the 1950s, coin dealers from the United States started making trips to Europe to buy gold coins and sell back home. Many rare date double eagles were discovered over the years, and many issues were radically adjusted in terms of rarity. Over the next decade, United States gold coins were repatriated back home at a regular pace. The pace was steady but not overwhelming enough to disrupt prices radically. The premium for common date double eagles has fluctuated over the years, with the occasional spike for one reason or another. The Y2K scare of 1999 created a rush to hard assets, and double eagle prices soared. Similar scenarios have played out over the years, but in general, price premiums have remained steady. I'm going to stop for 1 second there, and for your reference, here is the gold chart from 2008 to current, and I wanted you to get a feeling for the spot price in 2009 was about $1,000. Around 2012, it went from, say, 1,500 upwards of 1860. and then currently it's 1250. So these are the three time periods that are being compared in the Coin Week article: the low, the high, and then the midpoint. All right. As we go back to the Coin Week article now, you can see the three time periods: 2009, spot $1,000; 2013, spot $1,500; and 2017, spot 1250. So again, the low, high, and medium. Now you might expect coins to follow spot. However, numismatics really don't follow spot that closely. Something like a $1 gold coin has only in 2009 had a $48 melt value, but was selling for nearly $1,000 in MS63. But let's take a look at that. This is a pretty pure numismatic. So in 2009, when spot was low, it was $9.65. In 2013, when spot was high, it had dropped to $800. So the numismatic fell as spot was rising. That's normal. But then in 2017, spot dropped to 1250, but the numismatic did not rise back up. It continued falling to nearly half of what it was in 2013. So here is the drop-off he's talking about. That's a pure numismatic. If we look at something like the St. Gaudens double eagle, you know, kind of the holy grail of beautiful double eagle pre-33 gold, scenario is $1,600 in MS63 in 2009. As spot skyrockets, it actually goes up a little bit, okay, because it is nearly an ounce of gold. But then look what happens. Spot goes down $250, and the price of this gold eagle goes down $475. So definitely a good example of what the article is talking about. Some of these are even more dramatic. If we look at a half eagle, went from 970, has plunged all the way down to 475 at this point. So that, I think, is what he is saying here. In the article, he says, as can be seen from above, the most recent premium for United States gold coins are at historic lows. Okay, that's worth noting. For the last couple of years, the supply of United States gold coins coming from Europe has far exceeded the demand. Many have speculated on the reason for this occurring. Perhaps the European banks need capital, or they no longer view gold as a safety net of generations past. Regardless of the reason, current prices represent an important opportunity for anyone who loves vintage United States gold. Well, I ought to love it more. If I loved it before, I should love it more today, shouldn't I? Double eagles represent the large majority of gold coins that have flowed back into the United States in recent years. The price drops for these have put enormous downward pressure on the price of other common-date United States gold coins. I can assure you that very few gold dollars and quarter eagles are in European gold shipments. So he is saying that they threw the baby out with the bathwater. The double eagles are plentiful, but the dollar and quarter eagles, for example, are not and have been depressed artificially. Unfortunately, these have seen their prices slashed in recent years as well. It's sort of like throwing the baby out with the bathwater. In my opinion, these coins are raging bargains at these prices. There has never been a better time to find more attractive examples for your collection or as an investment. One idea that I would suggest: buy as many different dates of these issues at or near the current generic prices. This would be a great start for a serious collection of any of these issues. Remember, the prices listed above are wholesale indications, and your cost will vary depending on sources and quality. As usual, my advice is to buy the best coin you can afford. That's good advice. So let's just go ahead, let's go back over to AppMex, and let's see what's up with a double eagle. I was saying, as we look at Liberty double eagles, the price of $12.83, this is at AppMex, versus spot of $12.40, there's just a $40 premium on a double eagle. Let's compare that to generic bullion. Check this out. What does the buffalo sell for? 1 ounce gold buffalo, well, it's actually a United States Mint product. The gold buffalo sells for $13.13. So the gold buffalo and the American gold eagle, and you'll have to, there is a 0.03 difference in the amount of gold. $1,313 as opposed to this 100-year-old double eagle. Now, of course, the author of the story is saying you'd best to put your money into half eagles, quarter eagles, possibly even $1 eagles, although this is not even close to being a stack. But if we went to the half eagles, this is just about a quarter ounce of gold, $3.55. That is not horrible for such a beautiful, beautiful coin that has been depressed along with the flood of double eagles from the European market. At least that's what the author seems to think, and I think there's some great food for thought here. So what do you think? Is it time to buy more? If you like this coin at $1,600, do you like it more at $1,200? Is it time to upgrade the quality of your stack? If you have it in BU raw, perhaps you want to get it graded MS65. What do you think? What do you guys think? Are you buying more, or are you just basically done with pre-33 coinage? Give us your thoughts. Losing Louie signing out.